Hi, good evening, everyone, and welcome to live virtual classes of Board of Studies ICAI for the CA Intermediate course. And we are discussing Corporate and Other Laws Paper 2. And in that, we will be talking about prospectus and allotment of securities. That is the topic which we are going to cover. We are planning to cover this topic, particularly this chapter, into 4 sessions, and we'll go one by one. To move further, I would just, first we'll move into the learning outcomes as to what you are expected to learn out of this 4 sessions. And then we will proceed with the sections sequentially with understanding the concept and moving forward. So with that, let me go ahead and talk about the learning outcomes. So if you see the learning outcomes, which is given in your course module, is that at the end of this chapter, you should be able to define what is prospectus. What do you mean by prospectus? You should be able to understand various types of prospectus. This is what we are going to discuss today and go into the details of various types of prospectus. And then we are going to explain the procedure for issue of prospectus and other related concepts. So you should be in a situation to, provide that element and explain that how the prospectus has to be issued, what are the major things which needs to be considered while issuing the prospectus. Then you should be able to know the criminal and civil liability for misstatement in the prospectus, because prospectus is a offer document. It is a document which makes certain statements on the standard of a company, on the background of a company. And these statements, on the basis of these statements, the people make investment, and hence whatever is communicated has to be true. If it is not true, then there are liabilities, which includes civil and criminal liabilities both. And so we will discuss that, and you should be able to know what are the civil and criminal liability, and what is the punishment for fraudulently inducing a person to invest money in a company by way of a wrong prospectus issued. And you should be able to understand the procedure for allotment of securities by companies. So there is a set process which needs to be followed for allotment of securities, and we are going to discuss about that as well. And then to know the procedure of private placement of securities, which is one of the important sections or segments of the allotment of securities. Private placement is one of the important modes, and we will see that as well. If we look at the chapter overview and see that how this chapter is arranged, so we are dealing with chapter 3 of the Companies Act 2013. And chapter 3 of the Companies Act 2013 has the sections 23 to 42, and they deal with prospectus and allotment of securities. And if you want to bifurcate them, they are into 2 parts. Part 1 discusses the public offer, that is from sections 23 to 41. And part 2 deals with private placement, that is section 42, which discusses about the, private placement and requirement relating to private placement. So the provisions which are contained in part 1 and part 2 are basically supplemental to the regulation, or you can say rules. So there is a rules, companies, prospectus and allotment of securities rules 2014, that you have to read along with the part 3 of, or chapter 3 of the Companies Act 2013. If you see further bifurcation and broadly, you will see that the prospectus and allotment of securities, it is covering 2 major dimensions. One is in case of a public company and in case of a private company. And for prospectus and allotment of securities, you have to deal with issue of prospectus and related matters, that is being dealt with in 23, 26, 29, 31, 32, 25, 28, 27, and 40 sections. And allotment of securities has got a specific section, that is section 39. And then there are penalties provided in section 34, 35, 36, 37, and 447. So 447 is a broader section which provides for punishment for fraud. Okay, because if you would recollect, the Companies Act 2013 has brought in the concept of corporate fraud formally and there is a body called Serious Fraud Investigation Office, which looks at these frauds on the recommendation of the central government, that is Ministry of Corporate Affairs. So these frauds are covered under section 447. So that is also a related section which needs to be looked at. And as I discussed before, part 2 of chapter 3 talks about private placement, which is dealt with under just one section, that is section 42. Ironically, you will see that a lot of investment in companies happens by way of a private placement, and hence it is a very important section wherein more practicality needs to be understood. Section though is not that too many for private placement, but technicality of private placement happens by way of a lot of contracts, agreements, and we will see some of these examples when we go to that particular section of private placement. So let us proceed our discussion and talk about the law. So if you see the Companies Act, the sections are arranged like this. So you have chapter 3, which talks about prospectus and allotment of securities. And as I told you before, you can see part 1 talks about public offer, which has got sections 23 to 41. And part 2 has got private placement, which deals with section 42, offer or invitation for subscription of securities on private placement. So at a go, you can have a look at these particular sections and see the title of these sections, and it gives you a bit of a clarity as to what are the things which have been discussed here, what are the things which have been told here. So it starts with public offer and private placement, then power of Securities and Exchange Board of India, then matters to be stated in the prospectus and shelf prospectus, red herring prospectus, all these things which we are going to discuss in detail in the coming sessions. Now, before we go into the sections and details, let us understand the concept of raising and maintenance of capital. So in the initial lectures, you must have seen that formation of a company is done by way for a particular purpose. And one of the primary purpose of forming a company is to have separate legal entity and to limit the liability. So companies are limited liability companies, and the liability of an individual is limited in a company subject to the number of shares they are holding. And this concept, this idea is there in the company law, and primary idea in the company law, and on the basis of which the substantial part of the company law also deals with maintenance of capital and raising of capital. So if you have to run a business, you need money, and money can come from two sources. That is, one is a source which is by way of private arrangement, that you go to the friends, you go to the family, you go to the known people, and then you get the money. And second mode is basically to go to public or to go to anyone in the world and ask for the money. Okay, fine, I'm entering into this venture, or this is my business enterprise, and would you like to invest into this particular money on a projected future income or on a projected future benefit which may arise through that investment. So this is something which is at the core of company law or corporate law. However, when you are raising capital or money you are taking from different people, the question arises what you can do with this money, right? So can you use this particular money indiscriminately? Can you give it to somebody? Or say, for example, your company is not doing profit, and then can you deal with that particular money or declare dividends? These are the questions which will come up in a company law. And hence, the basics of company law says that while you are raising the capital, you should also maintain the capital. Maintenance of capital is a very important element given in the company law. And this you can read through different provisions under the Companies Act. Like, for example, there is a general prohibition on reduction of share capital. So there are sections which tells you that you cannot reduce the share capital by way of buyback of shares, or by way, you cannot vary the shareholders' right. This is section 48 of the Companies Act. So if a particular shareholder is having a particular right, you cannot vary this particular right to their detriment. Like, say, for example, if I have voting rights You cannot reduce my voting rights by issuing further shares unless you take me in confidence. So these are the what you can say checks and balances for maintaining the capital. But why we are doing this checks and balances? What is the necessity? So there are three legs to it. One is distribution of dividends. If you don't have rules, the shareholders would ask that, okay, fine, sell the assets and give us dividends, or maybe give us dividends irrespective of the profit which the company is making. So this cannot happen, right? So there is an independent board of management which decides that whether there will be a distribution of dividend or not, whether there will be a distribution of profit or not, depending upon the statutory requirements, right? And this is what is the law relating to maintenance of capital. Okay. So distribution cannot be indiscriminate. Secondly, there are restrictions on utilization of funds from various sources, including the share premium account. So if you see Section 52 of the Companies Act, it puts a certain restriction on the utilization of funds from share premium account under Section 52. Ultimately, overall, when we are looking at the maintenance of capital provision or raising of capital provision, this is done to, safeguard the interest of creditors and stakeholders who basically rely upon two things. One is the goodwill of the company with which it is working, and second is the financial stability or financial status. So anybody, any creditor or any person who is going to invest in a company is going to invest on the basis of the finances on the balance sheet. Or you just ask anybody who is doing share trading what they look at. They look at the basics, they look at the books, they see that how much is the financial worth of a company is, or what is the potential of this company to grow, or how much money can be pumped into this particular company. So this is a very, very important basics which we should have in mind when we are talking about prospectus, because ultimately prospectus and allotment of securities has to keep in mind this dimension. So at the base of it, a company must preserve its capital and cannot return it to the shareholders except in a legally permitted ways, and that is mentioned in different sections. And going forward, you are going to read that throughout the company law. And there is also a requirement of a financial discipline. If you don't have these regulations in place, if you don't have a norm of withdrawal, then it will be difficult for a company to operate. And hence, maintaining the financial stability and solvency of a company, it is important that there is a financial discipline. So this is a backgrounder, or you can say a policy, or you can say a theory behind the maintenance of corporate capital and raising of corporate capital. Because in a company, if you have to operate, there are, you have to maintain the working capital, you have to maintain, the assets, you have to have the mechanism of paying your debts, due debts on time. If you don't do that, then probably your company will go into the, insolvency. But at the same time, you cannot have too much of a cash or running working capital in your bank account, because that will be, again, your company will be prone to takeovers or such kind of issues. So hence, there is a, crafted balance which is required to be maintained while you are dealing with cash, or you are dealing with the capital of a company. So with this backgrounder, let us move further. And now we are moving towards the sections of the company. Let me see if you have any questions at this background level. Okay. Okay. I think there are no questions till this point. If you have any questions, you can put it in the chat box. I will be happy to address them. Let me check your administrative panel as well if there are any questions. No, there seems no questions there as well. Okay. So if there are no questions, let me proceed. Yes, Nisha, you wanted to ask something? You can ask now. Yeah, go ahead.
Sir, you told that how we can raise the capital and maintenance, that by
Yes.
distribution of dividend, utilization of security premium account and creditors. But sir, these point means we are reducing share capital. This means buyback of share. I could not
Yes.
understand these.
Okay, see, you have to understand here that the company law provides a detailed mechanism of dealing with the capital. So say, for example, you want to raise capital, 100 crores you raised for a specific purpose. Okay. Now you, out of that 100 crore, there is another 100 crore you got by way of a premium. So company law provides a mechanism to deal with all these funds. So you cannot take away money for one pretext or the other. Like say, for example, you don't do what is the rule of dividend, that your company should do profit and there should be, surplus for giving dividends. You cannot just declare dividends like that. From the assets, you cannot give it. You cannot give dividend from share premium account, right? So this is something which are rules given in the company law. So as a philosophy, we are trying to understand that money or capital which is raised has to be maintained properly, and company law has got provisions regarding that. So this particular slide tells you that. So you have to understand that money which is raised is secured or is taken care of by law, that it should not be misused. What is reduction of share capital? Reduction of share capital is when you want to reduce the share capital. What you will do? You will be actually, selling off, or you buying back your own shares from the market, and then you want to reduce it or cancel the shares. Now, this is something which is going to affect the rights of existing people. Just let us examine that there is a creditor who looked at your 100 crore which you declared as a capital, and he has invested or she has invested in your company on the basis of that 100 crore. And tomorrow that is only 80 crores. So basically that will be actually defrauding that particular creditor who has reposed upon your capital. Hence, it is said that the maintenance of capital is very important. So for raising of capital, there are norms, rules, and regulations. Similarly, for maintaining the capital, there are rules, norms, and regulations. Everything has to be done as per that particular rule. So it is not a free fall that you just sell your shares when you want, as a company I am talking about, or you just take money from the share premium account and do whatever you want. So that is not possible. There are regulations around it. So since we are talking about raising of capital, because prospectus, when we talk about prospectus, is dealt with by way of a raising of capital, but maintaining this capital is also a very important concept, and that is why I wanted to touch upon this at the introduction level, so that that clarity is there in your mind. So I hope this answers your question. Now let me proceed further, and if there are no questions on the chat box, okay. So this particular question on Hindi, I always get, but your medium of instruction is English. I'm sorry, Sridhar. But towards the end, or maybe in the break, I will try to, address your questions if you have any specific. So broadly, largely, the medium of instruction is English. So I will continue with English. You have to, cope up with that. But you can ask the questions in Hindi, and I will try to answer in the break or when the question
Good
answer
evening,
time.
sir.
Okay. Yes. Yeah, go ahead. Who
Sir,
is speaking?
all these restrictions are to. Sir, I am Anil. I'm
Yeah,
audible,
go ahead.
sir.
Yes, yes. Please go ahead.
Sir, all these restrictions
Yeah.
are under control. In order to secure creditors, companies act as monitored all these conditions, right?
Yes.
Okay, sir. Thank you.
Okay. Now let me proceed further and talk about the provisions relating to the prospectus. Okay. So if you see, there are different modes of raising of capital. So we talked about maintenance. You can raise capital by way of number of modes, number of methodologies. Capital can be raised, right? So one of the primary ways by which you can raise the capital is by way of a private placement. So as I told you before, you can raise it from friends, from relatives, or relatives of promoters and directors if you are authorized by a special resolution. And if you go in case of a public company, you can under section 23(1)(b) or 23(2)(b), in case of a private company, you can raise money through private placement. Now there are situations where you go for public issue also. So you can go to the public and then you ask them to contribute to the capital of a company's under the Companies Act. And wherever you go for inviting to the public for your capital, then this issue, you have to go for prospectus, you have to go for all information and detailed procedure. And this going to public can be for the first time. And whenever you go for the first time to the public, it is referred to as initial public offer or IPO, popularly known as. And if you go for the second time to the public for raising capital, so there is no restriction for going to the public. You can go many times to the public as and when you require money. But I think there is a restriction of 1 year in between two, public offers. Other than those restrictions, you can go to the public for raising money. But whenever you go for the second time to the public, that is referred to as further public offer of securities by the company. And there may be situations of offer for sale of securities to the public also by the existing shareholders. So we will talk about that in a while. So these are the three modes by which you can raise the capital. So the third one, many a times you will note that the public sector undertakings, the money which is for the shares which is owned by the government, they want to offload that because they want to raise capital from the public. So they will be opening up those issues to public, right? So that is, they are reducing their own shareholding and giving it to the public. That also happens in case of public sector undertaking. So that is offer for sale, basically. And then there is something which is referred to as rights issue. So rights issue is a situation where you are asking the existing members to take new shares in proportion to their existing shareholdings. So say, for example, you are having 100 shareholders and these 100 shareholders are, owning the shares with the value of 100 crores. Now you want to raise further 50 crore rupees. Then in that situation, what you do is you don't go to the market or the public. Rather than you go back to these 100 shareholders of yours and ask them, okay, we need 50 crore more. And will you be willing to, give that particular money? This will be referred to as the rights issue. And again, as you would see, rights issue is always by way of a proportion. So you have to go ahead with proportionate. Like say, for example, if there are shareholders who is having 50 shares, then you have to give them that proportion of rights issue in 50 lakh, additional 50 lakh, which you are raising. So this is a requirement of, these are the three primary modes by which you raise the capital in a company. Now, other than this, there are other modes as well for raising the capital, like, for example, sweat equity to employees, directors or promoters. So this is a way of issuing of shares to the, directors or employees in lieu of their service or in lieu of their work which they have done, or that is referred to as sweat equity shares. So this is also a kind of a contribution by these people, and on the basis of that you are giving the shares. So you don't get money actually, but on the you get on behalf of money, you get it in kind, the service or loyalty of the people who are serving for you. Then there are ESOP and employee stock options given to the employees under section 62. That is also a way of raising capital. Then there are issue of shares to others for considerations of cash other than the cash. These are the mechanism by way of as it may be determined by registered valuer, that is done under section 62. So 62 talks about these modes of raising capital. Then bonus shares is another mechanism by which you can issue shares. Conversion of debentures into shares, that is also a mechanism by which you are converting debt into equity. That is also one of the ways or modes of raising equity. And then conversion of loan or debentures into the shares, that is something which also so these all conversions are dealt with under section 62. So this is by way of just information, so that from where all the money can come. There is also compulsory conversion of debentures or loans that may happen in section 62. And then you can raise capital under section 41 of the Companies Act by way of a global depository receipt. So this we will touch upon in our subsequent slides. So you can raise money from foreign countries as well. But here you have to subject yourself to the FEMA regulations, FEMA rules. That is a requirement under the Companies Act. So these are the different various modes of raising the capital. Now let us look at the provisions. And if you see, securities can be issued by public company as well as by private company. Now, whenever a public company issues a security, it can do it by way of 4 modes, as you can see here. So one of the mode is by issuance of prospectus or public offer. And the other mode is private placement. And then third one is rights issue, which I have explained you. And then there is a bonus issue. So bonus issue is given to the existing shareholders and you give it as a bonus. Now, in case of private companies, you can have private placement and then there is a rights issue and bonus issue. What you don't find here is public issue or prospectus. So in case of private company, there is no requirement of a prospectus or a public offer, but it happens by way of a private placement, rights issue, and bonus issue. Whereas in case of a public company, there is prospectus or a public offer which is given. And explanation to section 23, which talks about issuance of securities, talks about this, and it explains, for the purposes of this chapter, public offer, that is public offer includes initial public offer, that is IPO, or further public offer, that is called FPO, as you can see in this slide, of the securities to the public by way of a company, or an offer for sale, OFS, of securities to the public by an existing shareholder through issue of a prospectus. So this is the 3 ways by which you can go ahead with a public offer. And whenever you are going ahead with a public offer, you have to issue prospectus. You have to give this particular document to the public before raising the money. This is the requirement. Now, section 23 of the Companies Act talks about the issue of securities. And if you see here in subclause 1, it says a public company may issue securities by way of what? By way of prospectus to the public, right? So this will be referred to as public offer or IPO or public offer. Or a public company can also go for private placement by complying with the provisions of part 2 of this chapter. So it is not necessary for a public company to always raise capital from public, okay? It may go for a private placement. It may go for a private arrangement of raising capital by way of, issue of a specific securities, or maybe you can say by way of loan from the government. Similar kind of a situation it may have, wherein they can issue securities. So here securities term is very, very broad. So you see, I will talk about the term securities in detail, but just note that here it is not talking about equity. Okay, what it is talking about? It is talking about securities. A public company may issue securities. Securities as a concept is very, very broad. It includes many things. We will talk about the definition. So this is the 2 modes. The third mode which a public company may utilize is by way of a rights issue or a bonus issue in accordance with the provisions of this Companies Act. And if the public company, this company happens to be a listed company, or it is a company which is intending to list itself on a stock exchange, then the rules or the provisions which are under the SEBI Act will apply. So rules and regulations which are made under SEBI, that is Securities Exchange Board of India, will apply in case of listed companies. So here you should note that when we are talking about public company, in public company can raise capital by way of a prospectus, that is public offer. It can go ahead with a private placement. And third, it can go ahead with a rights issue or bonus issue. These are the four terms which have been used. Okay. Public offer, private placement, rights issue, and bonus issue. And in case of listed companies, if the companies are listed, then in that situation, you have to comply with the rules relating to SEBI, that is Securities Exchange Board of India. So the companies which are listed on a stock exchange has to mandatorily comply with the rules relating to given by SEBI. Now, coming back, a private company can issue securities by way of only two things. One is by way of rights or bonus issue in accordance with the provisions of this act, or by way of a private placement. So these are the only two modes which are available for a private company to raise the capital. If a private company wants to raise capital or raise securities or issue securities to public, it has to convert itself into a public company. So this is a requirement under the law. So if you see here, the law is very, very clear. So in case of public company, we saw there are 4 modes. In case of private company, there are only 3 modes. This you have already seen here in this particular chart. This is what is the explanation of section 23. Now, let us understand the term securities. Okay. So we have used the term here in this section. You can see securities. So we are trying to understand what this securities means. So if you see the term securities, which is given under the Companies Act 2013, you will find that the security has been defined to mean securities as defined. So it is further referring to another definition given under Securities Contract Regulation Act, SCRA 1956. So in short, we call it SCRA 1956. That is Securities Contract Regulation Act. So section 2H of SCRA defines securities. What are these securities? So here it is an inclusive definition. You will find that number of terms have been used to define securities. So if you see securities include, it is an inclusive definition, and it says it includes shares, scrips, stocks, bonds, debentures, debenture stock, or other marketable securities of a like nature in or of any incorporated company or a pooled investment vehicle or other body corporate. So as you can see, this first clause itself is very broad. It includes equity, it includes debentures. It is basically talking about the term marketable securities. What is a marketable security? Marketable security is something which you can sell over the counter, which you can easily trade. That is called marketable security. Land is not a marketable security. However, a share is a marketable security. Debenture is a marketable security. Probably, a bond is a marketable security, which you can go to the market, share market, and sell it or buy it. This is what is referred to as marketable security. Now, second important thing which is included in the definition of security is derivative. So there are derivative instruments. I don't know whether you people have read derivatives, but briefly I will tell you about derivative. So derivative is an instrument or security which derives its value from the underlying. Okay. Like, for example, I can give you the example of oil now. Okay. So there may be securities which it is a commodity in commodity exchange. It is on the basis of oil, or maybe it can be on the basis of pulses, grams. So these are the different things which, or maybe property even like housing property. So derivative is coming from deriving its value from the underlying. So like, for example, you have got ETF instruments on gold. So you don't actually purchase gold, but you are purchasing a piece of paper which is of that particular value of gold. So these are all derivative instruments, derivatives. So I will not go into much detail of explanation. I hope briefly you have understood what is derivative. Then units or any other instrument used by a collective investment scheme, CIS, to the investors in such a scheme. So this is also a type of a security. So collective investment scheme has been defined under the SEBI regulations. And collective investment scheme is regulated again by SEBI. So here the securities are dealt with there under that particular provision as well. So that is also a security. If a collective investment scheme, paper is there which you can market or which you can transfer to anybody, that becomes a marketable security. And then units or any other instruments used by any pooled investment vehicle. So any other kind of a pooled investment vehicle, that is special purpose vehicle, or any other kind of an investment pooled investment vehicle will be referred to as security. Or any certificate or instrument by whatever name called issued to an investor by issuer of a special purpose. This we have discussed. It includes mortgage deed. So, I hope you heard about the subprime loan crisis or subprime lending. So there, basically the money or the underlying is basically the housing property. There, the beneficial interest can be traded. So these are the terms which is for security. Then government securities are there. So government may issue bonds and securities. That is also included in the term security. And rights or interest in securities are also referred to as security. So you can see securities definition is very, very broad, a very broad definition which includes many things. So it is not only about shares, it is about all these instruments. Now, I would like to give you a flavor of this because you will say that I have talked about so many instruments and whether it makes sense to you. So let us go ahead and talk to you about that. So I will just unshare this slide and I'll take you to the website where you can see these particular securities being listed. So I am taking you to the SEBI website, and you can see. Are you able to see the website? So this is the SEBI website where you will be able to see different types of offer documents or securities. So if you see here, this is the SEBI website, and on the left side, just put your thought. So you can see here public issues, and then it is talking about draft offer documents, red herring documents, final documents, and other documents. This is with reference to public issues. Okay. And then if you go ahead, then next is rights issues. So you are able to see in case of rights issues, these documents are there. Then there is debt offer document. Okay. Then in case of takeovers, then in case of mutual funds, then we have buybacks. Then you can see this is INVIT, that is your investment related fund. Then there is REIT, that is real estate investment fund. Okay. So these are different types of instruments. So you can see here SMREIT issue. This is another kind of a security. Municipal debt securities. So if there is a municipal bond or government security, municipal debt public issues. So I just wanted to, give you a highlight of that these different kinds of issues and instruments would be there. So I would suggest if you have some time, you spend some time on these because there are plenty of documents here. And this will give you a flavor of understanding securities market in a better way and will help you. Let us go back to the slide and go ahead. But there is a question. Let me talk about that. Let me take it quickly. So Harshal has a question, FPO, IPO, right? So public offer, yeah. Public offer, yes. FPO, IPO, yes. And then it is mandated to comply with the SEBI in case of public companies. Yeah. Not in case of all public companies, but in case of listed companies. So wherever the company is listed on a stock exchange, there is a requirement of following the SEBI regulations. And then you have asked the question, what are scrips? What is the difference between debenture and debenture stock? So Sushmita, I think these are two basic questions, and securities law, explains them. I can give you some examples here, but let me take this towards the end because then that will derail our discussion. I'll explain you this towards the end. Okay. Now let us, because I have to give a number of examples, then you will understand this. Coming back to our slides, if I take you to the term of securities, I think I have explained, except the term on scripts, which you wanted to understand. What is a scripts? Scripts is basically, not full-fledged shares, but a short form of shares. That is what I would say. It is referred to as a scripts. And mostly you have shares being traded, and stocks is a cumulative shares. So if you have cumulative 50 or 100 shares, that is referred to as a stock, basically. Same is with debenture and debenture stock. So debentures individually, and when you are having cumulatively 100 debentures, that is referred to as debenture stock, or maybe debentures of 3-4 companies together, that is referred to as debenture stock. So that is the difference between them. Let me now take you to the other part, that is section 23. We will continue. But before we move on, let us reflect this question. Under the Securities Contract Regulation Act, which of the following is not within the definition of securities? What do you think? What is the answer? Okay. Most of you are given answer D. Okay, very good. Only one person answered it C, but that's good. So you are correct. Your answer is D. That is unit linked insurance policies, or ULIPs. So section 2H of the Act defines securities to include shares, stocks, bonds, debentures, derivatives, units of mutual funds, collective investment scheme, government securities, and rights or interest in securities. However, the explanation clarifies that unit linked insurance policies issued by insurers are not treated as securities. Okay. So this is the definition. Let us now further move. So in section 23, they also talk about overseas securities market. Okay. So overseas securities market. So Fatima, I explained derivatives. You have to go back to the recording and hear it. But again, I will explain later. Okay. So overseas securities market, when we are talking about, so raising of capital, it is not necessary that only Indian money will be involved. Even foreigners can invest in our securities market. We can invest in foreign markets. So whenever we are investing into foreign markets, or whenever there is an inbound investment, or foreigners are investing in Indian markets, that is referred to as overseas securities market. And there are instruments like Indian Depository Receipts, IDRs, American Depository Receipts, ADRs, and Global Depository Receipts, that is called GDRs. So under Companies Act 2013, they brought forward these two sections, Section 23 subclause 3 and Section 23 subclause 4, which deals with the overseas securities market. So such class of public companies may issue such class of securities for the purposes of listing on permitted stock exchanges in permissible foreign jurisdiction, or such other jurisdiction as may be prescribed. So you can see there are a lot of permissions required. Okay. So if a public company may issue shares across listing for another stock exchanges, like I think Tata Motors is listed in UK or NYSE. Likewise, there are a number of Indian companies which are listed in foreign stock exchanges. So there they can raise capital. However, there is a requirement of permission, and you cannot do it in non-permissible jurisdiction. Like, for example, you cannot do it in China, probably in Bhutan. These are the places, or maybe some other places which are mentioned where you cannot. So you have to look at the RBI guidelines, FEMA guidelines. So Foreign Exchange Management Act deals with this foreign exchange and foreign currency. So since there will be a foreign liability, the section 23(3) is subject to the regulations on FEMA. Then section 23 subclause 4 talks about the situation where it says that in which situations you can exempt the application of section 23. So it says the central government may, by notification, exempt any class or classes of public companies referred to in subsection 3, that is basically the foreign companies, from any of the provisions of this chapter, chapter 4, section 89, section 90, or section 127, and a copy of every such notification shall be issued and laid before the parliament. So what it is trying to do, in case of a foreign issue, in case of American depository receipts or global depository receipts, there is no requirement to follow strictly the rules of the Indian listing requirements, right? So if someone is getting money in UK or USA, there is no need to follow all the regulations of Indian securities market, right? Because you're not taking money from Indian market. So why do you require the law of India to be followed completely? You give flexibility to the company who are raising capital from the outside. However, there are some other rules which are applicable to them. But you exempt them from the application of chapter 3, chapter 4, section 89, section 90, and section 127. And this exemption has to be also highlighted. Okay. So section 89 basically deals with declaration in respect of beneficial interest in any share. Section 90 talks about register of significant beneficial owners in a company. And section 127 talks about punishment for failure to distribute dividends. So these are the three sections which are talked about in addition to chapter 4, which talks about share capital, and chapter 3, which deals with prospectus and issuance of securities. Section 89 and 90 are interesting sections. These are the new sections which are brought under the Companies Act 2013, which basically deals with beneficial ownership. So you would recollect initially, there used to be Benami transaction. So X will own shares on behalf of Y. So on paper, the share will be of Y, but actually the share would be of X. So legally speaking, whenever there will be raid or something, then, Y will be liable, X will not be liable, but actually the shares will be held by him. So to curb this particular practice, now there is a requirement, even if the share, there are beneficial interest of a share that needs to be communicated to the stock exchanges and ROC, that requirement is there under the section of section 89 and 90. So at an appropriate time, you will, deal with this in detail. But right now, for this mention of section 23.4, I have just briefly told you about that. So you can see section 23.3 and 23.4 deals with the situations of foreign investment. You want to invest in outside countries of permissible jurisdiction, right? Okay, let me take some more questions if there are. Okay, it means, okay, it is not about exemption of overseas companies in India, but it is about Indian companies overseas. Okay, so if that is what it says such class of public companies may issue such class of securities for the purposes of listing on permitted stock exchanges in permissible foreign jurisdictions, okay, or such other jurisdictions as may be prescribed. So it is dealing with that. Like here, you can see one of the such other jurisdictions would be IFSCA. You must be aware about IFSCA, Gift City in Gujarat. That is a jurisdiction in itself. So it is not Indian jurisdiction. It is another separate jurisdiction. That is SEZ, Special Economic Zone. That has got a different law altogether. Okay. Now let us move further and talk about this question. So you can read the question and respond. What is the response? Let us see. XYZ Limited, an Indian company, intends to raise capital from investors outside India. The company deposits its equity shares with an overseas depository bank, which in turn issues negotiable certificates to investors in United States that are traded on US stock exchanges. The instrument issued to investors in this case is known as what? Okay. B, and most of you are answered B, and many of you have answered C as well. So friends, your answer, who have answered B, is the correct answer. That is American depository receipt. It is specific, okay? US stock exchanges, United States. So it is a American depository receipt. Any non-US, it will be global depository receipt, okay? So this is about the American depository receipts. Okay, now let us move further. So another question for you. Under the provisions of Companies Act, which of the following modes of issue of securities is permitted for both public and private companies? Okay. So I think most of you have got it except one person. That is, answer is private placement, right? So you have seen that chart, right? So in your course material also it is given there. You can see for public company, public offer, IPO can only be done in case of public company. Private placement is the only one where it can happen. Rights issue and bonus issue is also another one, but that does not mention in your options. So if your options has rights issue and bonus issue, that will also be included into the modes. Okay. Now we are moving to section 24. So section 24 of the Companies Act talks about power of Securities and Exchange Board of India to regulate and transfer of securities. So in section 23, you saw that for listed companies, SEBI has got the power. Now this power is coming from section 24 as well. So you see what it is saying? It says the provisions contained in this chapter, that is chapter 3, chapter 4, and in section 127 shall, insofar as they relate to, there are two items which it is talking about. That is issue and transfer of securities and non-payment of dividend. These are the two matters with reference to which by a listed company or those companies which intend to get their securities listed on any stock exchange, recognized stock exchange in India, except as provided under this act. This is an exception if there is no exception. Be administered by the Securities and Exchange Board of India by making regulations in this behalf. So you can see here what it is trying to say. It is trying to say any company which is listed on a recognized stock exchange or is willing to list on a recognized stock exchange also, then also this will apply. Okay. Will be administered by Securities Exchange of Board of India with reference to issue and transfer of securities and non-payment of dividend. These are the two matters which will be dealt with by the Securities and Exchange Board of India. In any other case, these things will be administered by the central government. And when we say central government with reference to the Companies Act, we are referring to Ministry of Corporate Affairs. Now, section 24 gives power to SEBI to make regulations. But what happens if the regulation is not made or regulation is pending? Explanation gives you the detail about it. So it says, for the removal of doubts, it is hereby declared that all powers relating to all other matters relating to prospectus, return of allotment, redemption of preference shares, and any other matters specifically provided in this act, central government, tribunal, or registrar will have the powers, as the case may be. So you can see here in subclause 1, there are two items which are mentioned, issues and transfer of securities and non-payment of dividends. Other than that, there are many other matters like return of allotment, preference shares. All these things will be governed by the Companies Act. Or you can say the central government, tribunal and registrar will be the in charge, not SEBI. This is what it is trying to tell you. But in case of listed companies, everything will be dealt with by the SEBI. Let us reflect this. If you have any What do you say? What is the answer? So Bala Murugan, actionable claim on mortgage debt is a security if that is an instrument which is issued on that, because any actionable claim on a mortgage debt, if it is by way of a securitized instruments, like say for example SARFAESI applies, so security receipts are issued, so that becomes a credible format. That is why it is referred to as security. I hope this clarifies your doubt. Okay, in this you are giving the answer both A and B. Okay, very good. So you can see here under Section 24 of the Companies Act, SEBI administers provisions relating to issue and transfer of securities and non-payment of dividend for listed companies or companies intending to be listed their securities. Other matters are dealt with by the central government, tribunal or registrar as provided under the Act. Now let us look at the SEBI's power. So what is the power of SEBI? First of all, SEBI is defined in Section 2, subclause clause 82, and it says SEBI means Securities Exchange Board of India, established under Section 3 of the Securities and Exchange Board of India Act. So SEBI, we call it in Hindi, that is Bharatiya Pratibhuti or Viniyam Board. So this is what is the name of SEBI. Quite complicated, right? Even the Hindi guys would be thinking that it is complicated. So Hindi is actually more complicated than English. English is much easier to transcend, particularly in case of legal language. So let us talk about that, what it is saying. So Section 24(2) provides you the detail, and it says that the Securities Exchange Board of India shall, in respect of matters which are specified in subsection 1. So we talked about two matters, right? Which are those two matters? Recollect that? Two matters. What are they? Which has been talked in 24(1). Yes, you type it in your chat box. Which are the two matters? Transfer and issue of securities, not shares. Okay. So Gayatri, remember, shares are only one form of securities. Okay. So it should be securities. Okay. And dividend. Okay. Very good. Very good. Very good. Okay. Now let us talk about that and move ahead. Okay. So here it is saying, and matters delegated to it under proviso of subsection 1 of section 458. We will talk about it, what it is. So the powers which are given, which SEBI has under section 11, 11A, 11B and 11D of the SEBI Act will be available under the Companies Act as well. So you can see here, if you see section 458 talks about delegation by central government of its power and function. So under the Companies Act in section 458 subclause 1, the central government may by notification and subject to such conditions, limitations and restrictions as may be specified, delegate any of its power or function under this act to anybody else. Okay, that includes SEBI. So some of the powers are delegated to SEBI. In case of any foreign exchange and all, powers are delegated to RBI, that is Reserve Bank of India. So these are the sections. If you see power and functions of the board, section 11 talks about functions of the board. 11A talks about board to regulate, prohibit issue of prospectus, other document and advertisement soliciting money for issue of securities. Then you can see collective investment scheme. Then you can see power of issuing directions. 11C talks about investigation and 11D talks about cease and desist proceedings, right? So you can see here carefully, 11C is not part of section 24(2), right? So investigation under the SEBI Act cannot be done under the Companies Act. Okay, Companies Act has got a separate procedure of investigation. I hope this is clear to you people. Okay, you are able to. I hope you are able to understand the distinction here. Okay. just try to assimilate this information. In a while, we will just move on to the next slide. Are you able to get it? This one? If you have got this or if there are any questions, you can ask me here till this point. Sebi. Then we move ahead. Okay, Harshal. Thank you. So let us move ahead and talk about the next one. So prospectus. So you are familiar with the prospectus, which is displayed on your page, right? And you must have heard about prospectus many a times in your schools. So we used to purchase prospectus in schools and colleges, higher education institutions. Everybody is supposed to issue a prospectus, right? What is the objective of this document? The objective of this document is that it will give you complete information, okay, about your fees, about the course, about the questions which will be asked, about all these dimensions are dealt with under the prospectus. Similar is quite a nature of your prospectus in case of company law as well. However, in company law, the prospectus is more detailed and it has got more, financial angle to it. So if you will see, prospectus is defined in section 2, subclause 70 of the Companies Act, and it makes a definition inclusive and it talks about different forms of prospectus. So section 2, subclause 70 talks about prospectus definition. And if you read the definition, it goes like this. It says, prospectus means any document described or issued as a prospectus and includes. So it is an inclusive definition, okay? Includes what? A red herring prospectus referred to in subsection 32. So we are going to see that in detail in section 32. Or shelf prospectus referred to in section 31. Or any notice, circular, advertisement, or other document inviting offers from the public for the subscription or purchase of any securities of a body corporate. So you can see here that there are two things which are very, very clearly mentioned here. Okay. One is shelf prospectus referring to section 31 and red herring prospectus referring to section 32. So the third one is a question because it is not clear. That is a gray area. That is any notice, any circular, any advertisement or document which is inviting offers from the public will also be referred to as prospectus. And that gives to the birth to another definition that is called deemed prospectus. We will talk about that. So the definition of prospectus is twofold. One, it is talking about a meaning. So prospectus is what? Prospectus is a document describing or issuing as a prospectus. So any document which is described and issued as a prospectus is referred to as prospectus. So it is not necessary that the term prospectus has to be there on the document. Even if the document does not mention the word prospectus anywhere, and it is in the nature of the prospectus, it will be considered as prospectus. Okay. So legal liability of prospectus attaches to that. So we will talk about that in a while. Other than that, it includes specifically the shelf prospectus, the red herring prospectus, and deemed prospectus. That is any notice, circular, advertisement, or document which is inviting offer from the public. Now, let us move further. But before that, let us reflect on this question. Yes, go ahead if you can answer this. ABC Limited, a public company, plans to raise funds by issuing securities to the public in 3 different tranches within a period of 1 year. Instead of issuing a separate prospectus for each tranche, the company files a single prospectus with the registrar before the first issue. So what kind of a prospectus it is? Okay. Nice. So I see people getting confused between D and B. Okay. Oh, someone has said abridged prospectus as well. Okay. All right. So this shows that we don't have clarity on this particular terms, and that is the reason I have asked you this question. Probably after the following slides, couple of slides, you will be clearly able to understand the difference between these. So here in this case, the people who ever opted for, give me a second. People who ever opted for B, that is shelf prospectus, is the answer. So a shelf prospectus under Section 31 of the Companies Act allows certain companies to issue securities in multiple tranches during a specified period without issuing a fresh prospectus each time, subject to filing an information memorandum before subsequent offer. This happens many a times in cases of bonds, debentures, which are issued for a whole year, right? Once you issue the prospectus, and then thereafter you can raise the money whenever you want in the period of 1 year. That is referred to as shelf prospectus. So this is a shelf prospectus. Okay. So as you can see here, prospectus is kept in the shelf. Whenever you need to have money, just pick up that particular shelf from the prospectus from the shelf and raise the money, because you have already declared everything and there is no material change which has happened in that prospectus. So this is an example of shelf prospectus. As you can see here, this is a prospectus and it is a kind of a shelf prospectus. This is basically a financial company, Eldevis Financial Services Limited. So you see here, for public issue by the issuer of what? It is a secured, redeemable, non-convertible debentures. As I told you that it is most of the times shelf prospectus is not meant for equity, but most of the times it is meant for debt and bonds. So you can see here in non-convertible debentures or debentures for and so amount. So you can see here, this is Eldevis. This is the prospectus. This is again the same prospectus. This slide basically shows the different, different entities which are part of the prospectus. We are going to do, look at them in detail, but you can have a look at the listing. So you see the non-convertible debentures offered through the draft prospectus and this prospectus are proposed to be listed. So it is not yet listed. Okay. It is proposed to be listed on Bombay Stock Exchange by way of a bond. So they have got the permission also from the Bombay Stock Exchange that it will get listed. So that permission number and date is also mentioned. So if you have any public comment, you want to comment on this, can be commented. That is date, time is also given. And you see there are lead managers to the issue. So these are the people who are managing this issue. These are professionals, that is Trust Investment, Nuvama Wealth and Tipson's Consultancy. These are the three merchant bankers who are managers who are managing this issue. And at the bottom, you can see debenture trustee to the issue. So there is a requirement of a debenture trustee. This is an intermediary under the company SEBI law. And then registrar to an issue, then credit rating agency, then statutory auditor. These are all information which you will find in a prospectus. This is a prospectus with reference to shelf prospectus with reference to Eldevis Financial Services. This was just as an example. We have seen the prospectus. You see, there are so many information which is given in the prospectus. So let us reflect on this question. What is the answer, do you think? Well, Pawan, your question, is it safe for the investment? Unfortunately, I am not the investment advisor and neither I want to, make any comment on that because SEBI has a regulation on investment advisors. So I cannot give you investment advice over here in the lecture. So these are different types of investments which are very much there. Okay. Okay. We have got mixed responses, B, C, D, E. Okay, fine. So what is the question? Let us reflect. XYZ Limited files a prospectus with the registrar before making a public issue of shares. However, the prospectus does not specify the final price of the shares or the exact number of shares to be offered. These details are to be determined later based on investor response. Under the Companies Act 2013, such a prospectus is called Yes, let me see what answers you have given. Okay, it is C, red herring prospectus. The people who all answered C is the correct, right? And if you see section 32 defines red herring prospectus and it does not include complete particulars. Now you may be worrying that why this word red herring? It comes from where? Any idea? Any one of you? The red herring prospectus. Where does this word red herring comes? Yes, Vedant. It shows some attention, definitely. So red herring comes from there. What else? Anybody, any idea? To the investors. Missing information. Red herring is missing information. Very good. Bala Murugan, that is also a way of looking at it. So misleading. Okay. Listen to the word. Okay. So you must have, watched climax movies or, thrillers where the culprit is just nearby, but nobody quotes them. So this is what it is. But, Sadia, you are correct. The major thing it comes from is red color. So basically, if you see the red herring is a fish. Okay. So it looks like this. So it is a dried smoked herring which is turned red by smoke. So this is a red herring. However, if you look at it is basically not from the idea of a fish, but it is from the idea of highlighting something or telling people or giving them a cue that everything is not provided here. Everything is not given here. You have to be watchful while investing in this particular instrument. So generally, if you will see in red herring prospectus, you find this highlighted in red like this. In the previous prospectus, you saw it was blue, but here it is red. So wherever you see this particular document, red herring prospectus will have a red highlight like this. Okay. So this is another example of red herring prospectus. I hope you could see this red herring prospectus. Here, this is a document which is taken from SEBI's website. So for your information, by the way, let me make it clear that I am not promoting any of these companies. It is just by way of an example we have picked up here to understand them. Okay. So none of you, should think that I am promoting these companies and then invest in it and then later on come to me saying that we have invested. You showed it in the slide. So it is just for your understanding. Okay. So you can see on the top, it is written red herring prospectus and it was issued on March 2, 2026. And it is also mentioning section 32 of the Companies Act. You can see there, right? And it is a company which is going ahead with that. So this is a prospectus which is not clear. So here you can see in the bottom, there are dots given. So say these dots denote that this is not final. This is yet to be completed. You also see SEBI ICDR regulations there. Okay. So this is made under SEBI ICDR regulations. We will talk about ICDR regulations in a while. Okay. Any question till this point? Let me check. Yes. Yes, Harshal. It is estimated information. True. But red herring prospectus generally have all information except these price and certain information. It is not there. But red herring generally will have a broader draft. Okay. So let's reflect here. This particular question, anyone read? You can read here. The promoters of XYZ Limited acquires a large number of shares from the company and immediately offers those shares to the public through a document inviting public subscription. The promoter argues that the document is merely an offer for sale and therefore the disclosure requirements applicable to a prospectus do not apply. In light of the provisions of the Companies Act, which of the following statement is correct? Whether you treat the document as prospectus since the company did not directly issue it, or the document will be treated as a deemed prospectus and must comply with prospective disclosure, or it will be a document is a valid without any disclosure, or document is governed only by the stock exchange rules. What is your answer? Okay. B, C, B. Okay. So your answer is B. The people who answered B are correct. So under section 25 of the Companies Act, when securities are first allotted to the intermediary and then offered for sale to the public, the document offering such securities is treated as a deemed prospectus. This prevents companies or promoters from bypassing disclosure requirements by routing the issue through intermediaries. So this is a point. So before I move on, there is also a concept which is referred to as abridged prospectus. So you can see here section 2(1) of the Companies Act defines the abridged prospectus. So abridged prospectus is a memorandum containing such salient features of a prospectus as may be specified by the Securities and Exchange Board of India by making regulations in this behalf. So you can see abridged prospectus is basically the short form of the prospectus, maybe 10-12 pages, and it contains major items. So there are regulations for abridged prospectus as well, and any application for shares has to be attached with abridged prospectus. So I don't know how many of you are from Delhi, but if you are from metropolitan cities or major main cities and you walk down the road, and you will find during the IPOs, 10-12 pager document along with the application will be there. So what you do, this is called abridged prospectus. So with the application form, there are details. So what you do is you fill the application form, tear that, and information remains with you, and then remaining page you can submit. That used to be there initially. Now everything is online, so you don't require a hard copy printed. But I recollect when I used to work in Competition Commission, and in the lunch hours we used to walk down that particular road. There will be a lot of during IPOs. They will place these pamphlets. I don't know how many of you have seen that pamphlets about the prospectus, abridged prospectus. Yes, it is summary of prospectus, Divya, very true. So this is abridged prospectus. We will talk about, see the term, details about abridged prospectus further. So this is abridged prospectus, right? So we have talked about this. So now we will go ahead with section 25, but I think I have told you about different prospectus and it is time for our break. It is already 7:17. So how much break we should take? 15 minutes, 20 minutes, whatever you say. Okay, 15 minutes. So we will take 15 minutes break. Okay, so 15 minutes, we will be back. So 15 minutes, it is like now 10. Okay, we meet at 7:35. So hello everyone and welcome back to the session. So we have been discussing about the different types of prospectus, and we have talked about shelf prospectus. We saw abridged prospectus, and now let us move ahead to another interesting type of prospectus, and that is referred to as deemed prospectus. So Section 25 of the Companies Act 2013 deals with documents containing offer of securities for sale to be deemed prospectus. So as I told you before that there is no need that there is a requirement of word used prospectus on a document to qualify it as a prospectus. Even any document, if it is in the nature of offering securities, then that will be treated as a prospectus, and that will be referred to, or that will be referred to as deemed prospectus. So let us look at the provisions. Okay. So a company cannot avoid prospectus disclosure requirements by routing securities through intermediaries before offering them to the public. So you cannot take a circuitous route or a divergence route to offer securities in any other way and call it that it is not by way of a prospectus. So this is something which is a very important element which needs to be looked at. So subsection 1 of section 25 talks where a company allots or agrees to allot any of its securities with a view. So when you say with a view, you gather this with a view from an intention. So it is referring to intention basically. Securities with a view that those securities, all or any part thereof, being offered for sale to the public, any document by which the offer is made shall be deemed to be prospectus, that is issued by the company for all purposes. So what is the repercussion of this? Repercussion of this is that that particular document will be referred to as prospectus, and all rules and regulations relating to prospectus will apply to that. So all the enactments and rules of laws containing provisions pertaining to prospectus, matters to be stated in the prospectus, and liability for misstatement shall apply to such deemed prospectus subject to section 25 subclause 3 and 25 subclause 4. So we will read that in a while. So section 25 talks about deemed prospectus, and as per subsection 2, the allotment is presumed to have been made with a view of offering them to the public where the following, any of the one conditions is met. Okay. First, securities are offered to the public within 6 months of allotment. So say, for example, I offer the securities by way of a private placement without in a prospectus, and a document is created, a small document, and I offer it to, some people. But after 6 months or within that 6 months period, I allot the securities to the public, right? So that will be referred to as deemed prospectus. Second condition is, or which can lead to the presumption that it is a deemed prospectus, where the full consideration has not been received by the company at the date of offer to the public. So these are the two conditions, either or, wherein it will be considered as it is a deemed prospectus. It means in case if any of the above two conditions are met, then issuing document shall be deemed to be the prospectus under subsection 1. So subsection 1 and 2 of the section 25 are not exhaustive in nature. They may be certain other situations when issuing document may be constituted as deemed prospectus. As I told you that it is a expansive definition, and courts have gone into the depth of the factual situations to determine whether it is a deemed prospectus or not. I will give you a case study now. so you will understand it better. So in SEBI versus Kunamukulam Paper Limited, this is a Kerala High Court case. It was said that where a rights issue is made to existing members with a right to renounce in favor of others, if the number of such other exceed 50, it also becomes a deemed prospectus. So you can see here what was the circuitous route. We have seen rights issue. Private companies can issue rights issue. Okay. So they give a rights issue, and in a rights issue, this is a case law which is prior to 2013 Act, that is 1956 Act. That is why the limit is 50. Now, what is the limit for making the shares public? Previously, it was 50. Now, how much? Okay, Harshal, it is not 100. Right, Tanu, it is 200. Good, good. 200 is the right answer. Gayatri, it is not 35, but 200. 200 is the number. Previously, this number used to be 50. Okay. And that is why in this case law, it is referred to as 50, but you have to read this as 200. So in this case, what has happened? There was a company and they made a rights issue. Rights issue means what? Rights issue is basically, what is rights issue? Can you answer? What is rights issue? Existing shareholders. Good, Nisha. So existing shareholders, when you are giving to the shares to the existing shareholders, that is rights issue. So it is by way of a private placement. You are doing a rights issue. Now you gave to the existing shareholders the shares. Now these existing shareholders later on, within the 6 months of the allotment, are selling it to more number of people, right? So they sold it to number of other people. Then it will not be, that particular document of rights issue will be referred to as prospectus, because you are reaching out to more number of people, by way of circumventing the regulations. So this is what is the, rule on deemed prospectus. I hope you got the understanding. We will talk about it more. Let us look at the requirements in case of a deemed prospectus. So if you see section 26, it talks about the requirement of a prospectus, or what are the matters which needs to be stated in a prospectus. Okay. But section 25 talks about the matters which are required to be put in the deemed prospectus. So it gives additional conditions than section 26, and that is why it is a specific section, section 25, and it says requirements in case of a deemed prospectus. So as per subsection 3 of section 25, the following matters need to be stated in the deemed prospectus. That is the document through which offer of securities to public is made under subsection 1, in addition to the requirement under the section 26. Section 26 provides for broader requirements of matters which are required to be stated in prospectus. In addition to that, for deemed prospectus, you have to mention some additional requirements. Which are these? First one, there should be a statement of the net amount received or to be received as consideration for the securities to which the offer relates. So as I told you that this is a circumventing route. So if someone has already issued, rights issue, and after that it has been issued to number of shareholders, then they have to make amendments to the existing document, right? So there you have to mention the net amount you have received by way of this additional rights issue, and to be received, or you are yet to receive, then to be received as a consideration for the security. So this will give you basically the amount and value of the issue of securities. Then the time and place at which the underlying contract for allotment may be inspected. So which is the time and place where the contract of this issue or additional issue will be inspected or available to be inspected? That is what has been talked about in subclause B. And then the person making the offer were named in the prospectus as directors of the company. So that has to be mentioned. So that who are the people who are, who have been making this particular offer are directors of the company because they should be in responsible position. And there is signing of deemed prospectus on behalf of the company. So as per subsection 4, it is sufficient if the document that is deemed prospectus is signed by its two directors. So if two directors of the company are signing the prospectus that is deemed prospectus, it is sufficient requirement. So there are three additional things which requires in the document: statement of the net amount received or to be received as a consideration. Second, time and place at which the underlying contract for allotment may be inspected. Now you can understand here, initially this document was not a prospectus, so it was not available to everybody to inspection, and hence there is a requirement. Once you consider this as a prospectus, then you go ahead with declaring the time and place of the prospectus. And the third one is the person making the offer are named in the prospectus as the directors of the company. Now, let us move ahead with an interesting case study, and this you people must have heard about, that is Sahara's case. Okay, Sahara case. It is a very popular case and a landmark case as far as prospectus and allotment of securities are concerned. So this was Sahara India Real Estate Corporation Limited versus SEBI, 2012 case, 115 SCL, that is the citation, 2013 1 SEC 1. So here the two Sahara companies issued an optionally fully convertible debentures, that is called OFCDs, to million of investors. Okay. And the companies, however, claimed it was a private placement to friends, associates, and workers. So it was not a public issue. This is what was being claimed by Sahara in this case. Here, in this case, the funds raised were exceeding 24,000 crores from more than 3 crore investors. Requirement at that point in time was 50. And here the investors increased more than 3 crore. So this case was a classic case which came before, and there was a huge, litigation being fought by Sahara in SEBI, Securities Appellate Tribunal, and subsequently in the High Court and Supreme Court. In this, the legal question, other than 3-4 more questions were there. One of the legal question was whether the optionally fully convertible debentures was a private placement or a public issue, requiring compliance with the securities regulation. So the claim of Sahara was that, okay, fine, it is a private placement and I am not supposed to go for the requirements under the SEBI. Why should I go for prospectus and all other requirements? SEBI was saying that you intended to reach out to so many people, more than 50, because this case is also under 1956 law. So now it is 200. So if you are reaching out to more than 200 people, there is a requirement of, going ahead with publication of the prospectus and all those particular statements, which has not been done in this case. And it was considered as a, fraud by the courts. And there is a huge penalty which was imposed. I will talk about this case in my next class in much detail. Okay. Today I have introduced this, and I would like you people to also read and do a bit of a research on this case so that you get it better when I teach you in the next class. Also, I would like you to read and come with some questions if you have on this particular case, because it is an interesting case where Supreme Court examined the requirement of a deemed prospectus, requirement of publication of information, requirement of the companies to disclose things, and also the rights of the investors and duties and responsibilities of SEBI as far as the securities regulator are concerned. So this is an interesting case, and I would suggest you all to read it. And though it is not part of your syllabus, but I think it will clarify many of the doubts which you have in this particular chapter. Any question till this point? Any one of you? Okay. If there are no questions, let me proceed further. So the question primarily which comes in our mind is that what constitutes an offer to the public? Okay, this is the basic question which comes. So in one of the cases, and I think there are a couple of cases which are mentioned in your course material also. This one is also mentioned in your course material. So this is a famous case of UK where Nash versus Lind. Here, what happened is that there was a person who, informed about issue of securities to one of his friends. His friends took it to another friend, and another friend took it in his office where there were 3, 4 more people who got to know about that. And then there was a question whether this transaction amounts to issue to public. Okay. So the question was that. I hope you got the question. So what is your opinion? Like say, for example, A is a person and A got information from Y that yes, I am a company and I want to raise capital and would you be interested? So this is a private placement. A got the information and A further shared this with B, who happens to be the wife of B, and B talks to few of their relatives, C, D, E, and then E talks to his attorney Z. Like this, they share the information. So, do you consider this is a offer to public? What is this? This is an offer to public or not? No. Okay. It is an invitation to offer. Okay. I think the prospectus should come from the company directly. Okay. 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 I have my take here, and I would say that till the point it does not reach beyond 200 people, it will not be an offer to public. But once it goes beyond 200 people, then probably that will be referred to as offer to public. Now, as one of the courts in India has said that it will depend on facts and circumstances of the case. So if you see Ratan Singh versus Moga Transport Company Limited, the court said that all cases, the determination of the question of an offer being made to public depends upon the facts and language of the notice and the particular circumstances of each case, right? So this is what is the law of the land, and this is the broad principle. However, look at what House of the court said, or Justice Viscount Summers said in the case of Nash versus Lind. He said, the public is, of course, a general word. No particular numbers are prescribed. Anything from 2 to infinity may serve, perhaps even 1, if he is intended to be the first of a series of subscribers, but makes further proceeding needless by himself subscribing the whole. The point is that the offer is as such to be open to anyone who brings his money and applies in due form, whether the prospectus was addressed to him on behalf of the company or not. So it is not necessary that every time the prospectus has to be addressed by the company. Some of you put that particular remark I saw in the chat box that it should be offered by the company. It is not necessary that it should be offered by the company. It may be offered by one of the directors. It may be offered on behalf of the company by someone. But ultimately, if there is an investment made by more than 200 members, this offer becomes a public. Okay. So this is how you will be interpreting. So there are some more points here. So let us look at this question to understand it better. So read this question. It is ABC Limited, a public company, makes an offer of securities during a financial year to the following persons. Okay. 180 individuals through private placement, 30 employees under an ESOP scheme, 40 qualified institutional buyers. So the company claims that the issue qualifies as a private placement under the Companies Act. So whether it is a private placement or not, what is your answer? What do you think? Okay. No, it is not private placement since 200 people is okay. Public offer. B. Okay. Fine. I think everybody has responded. Now let us see what is the answer. So answer is B. The offer will still qualify as a private placement because employees under the ESOP and qualified institutional buyers are excluded while calculating the 200% limit. This is a technical requirement. Okay. So the law is having some technical requirements, and that is why we are reading this particular law, right? So here under section 42 of the Companies Act, that is a private placement. We will see that subsequently. A private placement may be made to not more than 200 persons in a financial year, excluding qualified institutional buyers and employees receiving securities under an ESOP scheme. Since only 180 persons fall within the countable category, the issue remains a valid private placement. Okay. So I think many of you answered correctly. The people who have not answered correctly, nothing to worry. You will read, then you will come to know. Okay, let us move ahead. So now we are talking about contents of a prospectus. So contents of a prospectus, if you see section 26 deals with contents of a prospectus. And there are some few basic requirements of a prospectus, which is very much there, which needs to be complied. So subclause 1 says, every prospectus issued by or on behalf of a public company, either with reference to its formation or subsequently, or by on behalf of any person who is or has been engaged or interested in the formation of a public company, shall be dated and signed. So all prospectus are required to be dated and signed. This is very important condition because signature puts forward the authenticity of that document and there is an authorization, valid authorization. Second, it should be dated. So date of the prospectus is also very important because that is the date when it will be treated as public and communicated to the public. Then state such information and set out such reports on financial information. So wherever you are seeing this word such, that means there has to be a specification about that such. So state such information or set out such reports on financial information as may be specified by the Securities and Exchange Board in consultation with the central government. So who is going to provide for the details? What financial details are required? What information are required? It is basically the central government which will provide for the information which is required in a prospectus in consultation with SEBI will provide in consultation with the central government. Now here there is a proviso in the law and the proviso says provided that until the SEBI specifies the information and reports on financial information under this subsection, the regulations made by the SEBI under the SEBI Act 1992 in respect of such financial information or reports shall apply. So it is basically trying to tell that either the SEBI can come up with a regulation with specific to section 26 or whatever SEBI has framed the regulation with reference to your prospectus and all will be applicable in this case also. If you will see the previous section 26, it contained number of provisions. Those provisions have now been removed from section 26 and you will find that there is a rule that is Companies Act prospectus rules which provide for certain details, but most of the provisions relating to the prospectus you will find in ICDR regulations. I will come to that in a way. Third point which is required to be made in a prospectus is a declaration. So there has to be a declaration about the compliance of the provisions of this act and a statement to the effect that nothing in the prospectus is contrary to the following laws. That is the act, that is the Companies Act 2013. Second, the Securities Contract Regulation Act 1956, because it is a security which you are issuing. Third, Securities and Exchange Board of India Act and the rules and regulations made thereunder. So you can see it is covering all sphere. It is saying securities laws as well as company law. It should not be contrary. So you can see here in section 26, they are talking about four things. One, it should be dated and signed. Second, it must provide such information. The list of information, I will tell you which are the information required. Third, it must provide such reports on financial information. So two kinds of information, general information and financial information. And fourth, the declaration which is required, and this declaration must say that everything which is given under Companies Act, Securities Contract Regulation Act and SEBI has been complied with. I hope this is giving you a complete clarity of what is required in a prospectus. Now let us move further. There are some exemptions, however. But before we move on to the exemptions, if you have any questions till this point, any one of you. Any questions? Yes, go ahead, Harshal.
Sir, in first subsection of section 26, in that provided that I could not understand, sir.
Okay, so it is saying basically that provided that the information, whatever information you see on the previous, it is saying such information or such financial reports as may be specified by SEBI in with reference to central government. If you look at the proviso, it says that SEBI until the SEBI. So here you can see here it is saying SEBI will provide details, what information has to be given in consultation with central government. But till the time such things are provided, whatever regulations of SEBI are there will be applicable. So you try to understand that when this law came up, 2013 Act, this provision was a new introduced provision at that point in time. Previously, this power had with central government. So SEBI came in 1992. So they already had the regulations in place for dealing with prospectors and everything. But when the section 26 provided that, okay, fine, SEBI will provide details with reference to central government, this proviso gave a time, time period to SEBI. Okay, fine. If you till the time you come up with a specific regulation under section 26, whatever regulation you have framed with reference to prospectors and all will be applicable. This is what is the meaning of that proviso. I hope that you got the understanding.
Oh, yes, sir, understood.
Yes. Okay. Any other question? Any one of you? Any other question? Yeah. So it is a question time. You all can ask questions now because it is already 8 p.m. So last half an hour I keep for questions. If you don't have any questions, I will proceed with the content. Yes. Sadia, I could not get your question. Prospectus issued by company directors. What does it mean? Okay. Till the time we get more questions, let me proceed. So under section 26, there are some exemptions also which are provided for the provision of prospectus. And it is with reference to two kinds of situation. Okay. The first situation talks about rights issue. So whatever we saw in the previous slide, this is all these provisions will not apply to the situation where the issue is made to the existing members or debenture holders of a company, of a prospectus or form of application relating to shares in a debenture, whether an applicant has a right to renounce the shares or not under subclause 2 of clause A of subsection 1 of 62 in favor of any other person. So in case of rights issue, this provision will not apply. Second, to the issue of a prospectus or form of application relating to shares or debentures, which are to be in all respects uniform with shares or debentures previously issued and for the time being dealt with in quoted on a recognized stock exchange. So probably this is referring to shelf prospectus. So, or it is talking about a situation where prospectus is already issued and then again you are going ahead with further public offer. So those situation, the provisions relating to prospectus will have an exemption. Okay. Third point, it is saying, subject to subsection 2, the provisions of subsection 1 shall apply to a prospectus or a form of application, whether issued on or with reference to the formation of a company or subsequently. So, prospectus requirement can be at the time of the formation of a company or subsequently or by way of any notification later. So this is important because many companies are formed specifically for raising capital, right? Special purpose vehicle. So in those situations, this particular clause will be applicable. So explanation here is the date indicated in the prospectus shall be deemed to be the date of the publication. So whatever date we refer to in subclause 1 will be referred to as the date of the publication of the prospectus. So this is an exemption to the proviso of the prospectus. So you have a question here again. So please try to answer. Under the Companies Act 2013, the requirement relating to offer of securities to the public will not apply in which of the following cases? What is your answer? Good. So you are following. Very good. Very good. Nisha, it is, I think you have not followed it. Answer is A, when securities are offered to existing members of a company under a rights issue. So you can see here, the provisions relating to the offer to the public do not apply when securities are issued to the existing members or debenture holders under a rights issue, even if they have the right to renounce the offer in favor of another person. The exemption also applies where the securities are uniform with those already listed on a recognized stock exchange. Okay, so this is about the prospectus. Now there is a requirement of filing the prospectus with ROC and SEBI. So subclause 4 of section 26 requires that no prospectus shall be issued by or on behalf of a company or in relation to an intended company unless on or before the date of its publication there has been delivered to the registrar for filing. Previously, this word filing was registered. There was a requirement of a registration of prospectus. Now there is no requirement of registration of a prospectus because once you say registration of a prospectus, there used to be stamp duty and all those complications used to come. Now, since most of the things happen electronically on a digital platform, so it is now replaced with filing. It is ease of doing business. A copy thereof signed by every person who is named therein as a director or proposed director of the company or by his duly authorized attorney has to be there. Okay. So you have to make a filing of the prospectus and you have to, every person who is named in the prospectus has to sign or his duly authorized attorney has to sign. Now, every prospectus issued under subsection 1 shall, on the face of it, state that the copy has been delivered for filing to the registrar as required under subsection 4 and specify any documents required by this section to be attached to the copy so delivered or refer to the statements included in the prospectus which specify these documents. Now, registrar shall not register a prospectus unless the requirements of this section with respect to its registration are complied with and the prospectus is accompanied by the consent in writing of all the persons named in the prospectus. So every person has to be named in the prospectus. Consent has to be there, because you cannot put a name of somebody whose consent is not there, because there is civil and criminal liability attached to the statements made in the prospectus. So there is a requirement of signature of people who are written there. There is also a clause which talks about statement of an expert. So sub 26 subclause 5 says that in a prospectus, many a times you utilize the statement of an expert. Like say, for example, you are coming up with a real estate project, or maybe railway project, or maybe any other kind of a project, maybe pharmaceutical new drug product you are coming up. In all these situations, you want to make your case of raising capital to the public by an explanation from the expert. Okay. So if you utilize that particular expert, then this provision says that a prospectus issued under subsection 1 shall not include a statement purporting to be made by an expert unless the expert is a person. So it has to be a individual. It cannot be an artificial intelligence person, by the way. Okay. Nowadays, you cannot say that, yes, I asked for the input and chat GPT gave me the input. You cannot do that. You have to say expert is the person who is not and has not been engaged or interested in the formation or promotion or management of the company. So the person has not to be related to the company, an expert. Second, has given his written consent to the issue of the prospectus. So he must have given his consent that, okay, fine, you are using my statement, you can use it in the prospectus. And has not withdrawn such consent. So it should not be a situation that I gave the consent today and later on I withdraw the consent. Okay. So that consent must not be withdrawn before the delivery of the copy of the prospectus to the registrar for filing. So registration here is already deleted, and a statement to that effect shall be included in the prospectus. So one has to write that particular statement in the prospect. So these are some of the examples of experts who give their opinion generally. Like, for example, chartered accountant who provides an audit or valuation report about a project, or engineer who is having a technical physical feasibility report. Let's say, for example, you are coming up with an IPO and they are saying that, okay, fine, we are establishing a big factory in SEZ. So these reports are expert reports. Or maybe a legal expert giving an opinion on title of the property. These are the different experts who may be utilized in the statement made in the prospectus. Okay. So this is how we talk about the statement of an expert. I hope you got the understanding about statement of expert. Now there is also a penalty of contravention. So if someone does not listen and they do something wrong here, then there is a requirement of a penalty as well. So if a prospectus is issued in contravention of the provisions of this section, the company shall be punishable with fine, which shall not be less than 50,000 rupees, but which may extend to 3 lakh rupees. And every person who is knowingly a party to the issue of such prospectus shall be punishable. This is an individual fine, with fine which shall not be less than 50,000 rupees, but which may extend to 3 lakh rupees. So you can see for individuals, the fine has been increased now. Initially, it used to be less. Secondly, you can see there is a decriminalization of offenses. So this offense is no more a criminal offense. Okay. So if anybody who does a contravention of the provisions of the section mentioned in 26, it is not a criminal offense. So I say, for example, if someone misses to give the information, there is a penalty, civil penalty, but not a criminal offense. However, there is a criminal liability for misstatement in the prospectus. We will talk about it in a while. There is a requirement of intention. So it becomes a more complicated issue. And when we discuss that, when we say about the liability of the prospectus, we will talk about it in detail. So penalty is quite hefty, right? 3 lakh rupees is a good amount, 50,000 rupees as a fine. Now, validity of the prospectus. So prospectus shall be valid not more than 90 days after the date on which a copy thereof is delivered to registrar. So period for a prospectus to be valid is 90 days. However, you have to seek the exemption. In case of shelf prospectus, there is a separate provision, right? That is 31. So we will see that what does it mean. So the date of issue is important for many reasons. One of them being the value of the securities keep changing. So 90-day period is a sufficient period. After 90 days, security prices may change. So if 90 days have expired after filing the prospectus, it is better to send a fresh copy of prospectus to registrar under section 26(4) to avoid the penalties which can be imposed in section 26(9), which we have just seen, 50,000 to 3 lakh rupees. So the penalty is both to the company as well as to the individual directors who are involved in the making of the prospectus. So this is how this is what I wanted to discuss today. I think it's already 8:16. We will take some questions. But before we go to the questions, I would leave you with a thought here on the rules. So this we will cover next time. That is Companies Prospectus and Allotment of Securities Rules 2014. So you are supposed to refer to these rules. These rules are made, as you can see, in exercise of power which is conferred to central government under section 26, subclause 1 of section 27, section 28, section 29, section 31. So wherever in the chapter 3 you find as may be prescribed, all these prescriptions you find in the rules. That is Companies Prospectus and Allotment of Securities Rules 2014, right? And these are referred to as Prospectus and Allotment Security Rules of 2014. Some examples I can give you, like information to be stated in the prospectus is given in Rule 3. Reports to be set out in the prospectus is given in Rule 4. Then other matters and reports to be stated in the prospectus is Rule 5. And period for which information to be provided in certain cases is Rule 6. So these are the different rules which provides in detail what should be there. So in our next class, we will go into the details of these rules and see what are the contents of a prospectus. I just introduced this to you so that you can go back, read these provisions again and come up with questions. If you have any questions subsequently also, and the case study on Sahara, that is something which we are going to discuss in our next class, and we will proceed with the next session. We are remaining 3 sessions more in prospectus and allotment of securities, and I feel that is sufficient enough to cover this particular topic with engaging questions with you. So any questions till this point, any one of you? Will be happy to answer. Any questions, any clarifications, any queries? Yes, go ahead.
Good evening, sir.
Yes.
While issuing prospectus, a specific company should focus different manner, like to attract all investors, all the people, right? Could you please tell me, with an example, how should a company, specific company with different objects, should focus on a prospectus?
Yes. So see, as far as prospectus legal norms are concerned, they are uniform for irrespective of the company's nature, its product, and all companies have to follow the same process of issuance of prospectus as well as content also, because it is clearly defined. The only difference or different thing which the companies can do is they can conduct road shows. They can, in an IPO, they can go ahead with more number of advertisements. They can go ahead with interactions. They can go ahead with all those particular what you can say, branding, advertisement. These are the things which they can do for reaching out to more and more public, depending upon its own area of operation. Like say, for example, if they want to go ahead with a pharmaceutical company, they will reach out to more number of people who would be interested in that particular area. So that is a strategy which is being decided by the marketing company, and probably the merchant bankers, they take a call that who should be the publicity manager or who should be the people who will be taking forward the publication. Generally, they will do road shows, they will do advertisement, or maybe shows in business channels like that. They will do that. But as far as law is concerned, that is same for all, and everybody has to follow the same process. Same declarations have to be given. I hope that answers your question. Yes, go ahead, Harshal. You have raised your hand.
Sir, I have a question. I have a general question actually.
Yes.
Sir, can you these notes you provide on the boss portal?
Yes, we will. This will be uploaded on the portal. I will create a PDF and I will upload that.
Okay, sir. Means I
So if you
can.
are registered to the portal, you will get access to this.
Yes, sir. I had registered actually.
Okay, fine. You will get the access of it. I will upload it just now after some time.
Thank you, sir. Great session.
Yes. Any other question? Yes, Sushmita, go
Good
ahead.
evening, sir. Like these days,
Yeah, go ahead. Yes, Sushmita, go ahead, please. You have raised your hand.
Yes, sir. So I wanted to confirm my understanding on the number of securities that can be issued. So, number of securities that can be issued below 200 will be considered as private placement, and above 200 will be public offer, is it?
No, see, it is not number of securities. So kindly get understanding of this clear. When we say number of securities, that means we are talking about different kinds of securities. Okay, like shares, debentures. So it is not dependent upon the number of securities. It is dependent upon the number of members or number of people who are investing into the company. So
Okay.
the number which talks about in section 41 is 200 members. So if, say, for example, you are coming up with a debenture issue or a share issue, and you are issuing those securities to more than 200 number, then it becomes public. Below 200, it is private.
Okay, sir. Understood.
Right?
Yes, sir. Thank you.
Yes. Okay. Mr. Golti, Anil, you can go ahead with your question.
sir, how can we get to know that like specific company loops after examining the prospectus? Like, do you have any plan, or like, do you have any like key point
No, I could not get your
to
question. Can you
examine?
elaborate it further?
Sir, like in order to examine the performance of a company, like how can we, like how to roll back, roll
Okay.
back
So you are basically saying that
after watching the
how we can
prospectus of a
examine.
specific company. Like,
Okay.
do you have any plans?
Okay. So see, point is that if you are
Yeah, sir,
trying to
exactly.
if you are trying to understand a
Yes.
company's IPO or prospectus and do a
Loops
comparison
or
and go into the
like
depth of it,
performance.
so I think there are multiple ways to do it. But if you are into the sector, if you are working already into the sector, then you will know which are the major pain points to look at it. Like, say, for example, if you are talking about a real estate project, so you will see that whether any highways are coming nearby, what is the valuation of that land, what is the policy of that state government, how easy it is to transfer that particular land, whether the land has all got all clearances, whether any litigation is
Yes, sir.
pending. These are the major things which you look at it. This is basically referred to as due diligence. So if I am a bigger investor, probably I will employ a valuation expert to look at that. I will employ a professional to do that particular work. This is what I would do if I am a bigger investor. If I am a small investor, then I will do a preliminary study and do some research. And generally, whenever an IPO comes, there is a lot of news channel who cover this IPOs, and they put up the discussion points and everything. So that also helps you to understand that what is the valuation of that particular IPO, what are the pain points, what are the major challenges. So that way it can be covered. As such, I don't have any specific plan because I don't invest into equity or debt right now. Yeah. Yes. Go ahead. Yeah, interesting point, Mr. Kambir, on red herring. That is what it is intended to be, but it is not. It is exactly opposite if you look at it. So red herring is basically there not to, misconceive or give wrong information or mislead the public. It is opposite of that. That is why it is red herring, because you may be misled. This is what is the perception which is being projected in the red herring prospectus to the investors. That beware, be careful. This is what is the message. Yes, Divya, go ahead.
Good evening, sir.
Good evening. Good evening. Go ahead.
Sir, can a deemed prospectus be signed by one director and one CS if the company has a CS?
No, it mentions two directors, right? So I think that has to be two directors.
Okay, sir. Thank you, sir.
Yes. Yeah. Company secretary, if he is also a director, then they can sign. I don't know whether that is permissible or not. Yes, Harshal, go ahead.
Sir, actually, in point of Divya, who are student, who said about the director and with the CA, which means secretary of the company,
Yeah.
can sign. I have opinion on that. Can KMP also sign? Means it means which are included in the KMP definition under the preliminary chapter of this model. Means
Uh,
first chapter of that.
Now see, the provision says two directors. Now directors means directors. You have to have a look at it that way. That will include KMP. But many a times you can see there are some KMPs who may not be the directors.
Yes, sir.
So in that situation, probably not. So here, let us simplify it that anyone who is having the designation of a director, and that's so as per the definition, director is a person who is designated as such as a director, right? Appointed as a director. That is the definition which it is saying. So that that person can sign two directors.
Okay, sir. It can be changed about the when the company making the prospectus or issuing the prospectus
No, it
to
is
the.
only about the declaration, no, Harshal. If you see, otherwise it is saying that anybody who is named in the prospectus has to sign if they are filing it for the ROC. Everybody has to sign.
Okay, sir. Means
It is not
prescribed.
only two. It is not only two people. Anyone who is named in the prospectus, everybody has to sign.
If prescribed by the company, right, sir?
Yes.
Okay. Whatever we know, name called to them.
Correct.
Okay.
So
And
whosoever's name come in the prospectus, they have to sign. That is what is the requirement. It is mentioned.
okay, sir. Understood, sir. Thank you, sir.
Yes. But the declaration which is mentioned there, because there are four requirements which we saw, one of them is declaration. That declaration requires two directors.
Okay. Means the
That
declaration
everything
are
has been
required.
complied with. Okay.
Okay. Means a declaration are required from the who will be signed on the prospectus and whatever.
Yes. No, declaration is for the fact that everything has been complied and nothing is contrary to the Companies Act or regulations or SEBI Act. That is
Okay,
the
sir.
declaration.
Okay, sir. Understood, sir.
Huh. So the question which was put by Divya was appropriate because she was saying that because company secretary job is also that whether his signature or her signature will be okay with a director. But
Yes,
here
sir.
responsibility is of a director. Company secretary anyways works. That is a different thing. But here there are two directors who will be responsible for signing it. Yes, Tanu.
Sir,
Go ahead,
can you
Tanu.
explain, can you explain subsection 2 of section 25.a and b?
Okay. What is your question? Can you again repeat? Please be a bit louder.
Subsection 2 of section 25 point A and B.
Okay, 25. Let me go back to the section so that I can have a look at it. Twenty-five, 1A and B. Okay. It is talking about deemed prospectus, right? And in deemed prospectus, it is talking about two things. One, it is saying first, securities are offered to the public within 6 months of allotment. This is a condition. Okay. So, what is a deemed prospectus? Deemed prospectus is a situation where initially the issue appears to be a private placement. However, it is bypassing the regulations, you are making it a public placement, right? So in those situations, you look for if the securities which are offered to public within 6 months of allotment. So say, for example, I offered a rights issue today, okay, to the existing shareholders. And within 6 months, I find that they are going to more number of people and issuing it. I gave you an example of 100 shareholders having 100 crore rupees and 50 crore rupees is being raised by, rights issue to the existing shareholders. That is 100. Now these 100 people reach out to more number of people and sell their shares, whatever they got in the rights issues, within 6 months of allotment. And that increases beyond 200. Then in that situation, this will be considered to be a situation of deemed prospectus. Because what you are doing by bypassing the rule, you are reaching out to more number of people, more than 200, which has been given in section 41 as a private placement. So in that situation, this provision will get triggered. Second situation where deemed prospectus will get triggered is where the full consideration has not been received by the company at the date of the offer to the public. So the company is yet to receive the complete amount. Then in that particular situation also, the thing will be considered as, deemed prospectus or reaching out to the public.
Okay, sir. Thank you, sir.
Yeah. Any other question? Any one of you? Yes, Harshal, go ahead. Last question. Yes.
It means, sir, which you told now to the Tanu,
Yeah.
and in that point, I want to add it key. It means you told is not in full consideration. If it is
Yes.
if it is in not a full consideration, then it is be deemed as a prospectus, right, sir?
Correct.
If it is a full consideration, as we say,
Yes. So
allotment.
if it is a full consideration, then the first clause will apply, no?
Yes, sir. Means any other, no, means
Yeah,
at least
any of these conditions will apply, right? So both are applying. So you have to meet actually both.
Okay. If in anyone are not meet, so it is not a deemed prospectus, right, sir?
Yes.
Okay. If any other exception for that key, you can say key as a if is a full consideration is a not
So see,
received.
full consideration, it is trying to say that even if they have not reached out to, say, for example, what it is saying, after 6 months, or maybe it has reached out after 6 months, if full consideration is not there, then that clause can apply, no?
Yes.
So first clause talks about the period, right? 6 months within allotment. Second clause does not speak about the period at all.
Okay.
It
sir.
is just talking about full consideration.
Okay.
So
I
that
want
can,
to say
that
from
can,
you, if in point of view of allotment, first call and the second call, how do you link these points to this scenario? Which means I told you allotment, then first call, then second call, offer.
okay.
So,
So first call, second call, before first call, second call, if they reach out to the anybody for the sale, then that will come here.
okay, it means after that we can say ki it is a deemed prospectus.
Yes.
Okay, sir. Understood, sir.
So I will take some more problems on this 25A and B so that you are able to, understand it better in our next class. We'll talk
Yes,
about
sir.
that.
Sure,
Okay.
sir.
Yeah. Any other questions? Any one of you? Okay, then, so we will continue our discussion. I think we are having a class on 15th now, 15th and 16th, we will have the classes. So in the
Oh,
meantime, you can read the provisions and let us, meet in our next class. Thank you. Have a nice,
good evening, sir,
yes.
and good evening to our students. This is CA Shraddha, Faculty Board of Studies.
Hi, Shraddha, ma'am. How are you?
So, sir, I just wanted to ask my students that do they have any query for Board of Studies?
Ma'am, I have a question with Boss app. It means is there any technical problem which I can't able to join from the Boss from my mobile application, Boss application through the
Yes.
Zoom link.
Okay.
Okay, so it is resolved or not? I am
Yes.
actually from
Yes.
laptop.
All the students are being issued OTPs and everything, and most of the students are able to join. Only a few students are not able to join. If in that case, we ask the students to restart their mobile and or either update the app, okay, and then
Okay.
they are very easily able to join the class.
ओके मैम एंड आई हैव वन क्वेश्चन मैम कि
Yes.
मैंने एक्चुअली मैंने ने क्या लिंक अभी जो ओटीपी का था जो आपने बोला कि हाँ ओटीपी का
हाँ
मैंने
जी.
प्रोसेस किया बट इन माय
Hmm.
मोबाइल एंड नाउ आल्सो आई एम नॉट एबल टू जॉइन टू द एलवीसी सो
Okay. Just
व्हाट आई कैन डू
okay. आप इसके लिए just go to the query pad of ICAI, drop in, give me your like your registration number and everything, and then I will ask my technical team that why you are not able to join. Okay?
ओके मैम बट आई हैव वन इंफॉर्मेशन मैम पास्ट
Yeah.
इंफॉर्मेशन अबाउट दैट कि मैंने जब मतलब लॉ का मैं लेक्चर कर रहा था with
हाँ.
Harlin Kaur ma'am, and
हाँ जी.
there I had joined it with a two device. Then one device is, subsequently are closed, which are showing the signature is not valid and whatever. So I'm
Actually,
not
आप
able to.
साइमल्टेनियसली आप अपने नंबर से जो आपका रजिस्ट्रेशन नंबर है दो डिवाइसेस से नहीं कर सकते. दिस इज स्पेसिफिकली डन सो दैट द इंटरेस्ट ऑफ जेन्युइन स्टूडेंट्स इज प्रोटेक्टेड. दैट्स व्हाई अब हम दो डिवाइसेस से अलाउ नहीं कर रहे हैं.
Okay,
You will
ma'am.
be automatically logged out of the second device.
Okay, ma'am. Sure.
Okay. And then I have a announcement to take, which sir has already said that your next class will be on 15th. Like today is 9th and the next class would be due on 14th of March. However, this class is for 15th of March and this is all that is a Sunday and it has been already updated on the website also.
Okay, ma'am. Means
I
schedule
hope
are updated for this
yes,
date.
the
Should
schedule
be.
is updated. So kindly note it. Okay.
Yes, ma'am. Yes, sure.
And any other query for us?
No, ma'am. Clear.
Okay. So with this, I think we can close down today's session with your permission, sir.
Yeah, sure. Thank you. Thank you, Shraddha, ma'am. Thank you.
Okay. Okay. Technical team, we can close down this session and thank you, dear students. Have a good night.